Cool. So yeah, for the new comers here, I'm M. He's the other guy who usually leads the webinars, but today I'm going to be covering topic 5, which is your higher time frame down to lower time frame analysis. And to help us do that, we ask ourselves certain questions, which are your what, why, when, and where. So to start with, what exactly is your top-down analysis? So the top-down analysis itself is working from your higher time frame down to your lower time frame. As you can see right now, I'm on the monthly. And the way I'm going to structure this is that I'm going to work my way downwards towards the lower time frames, and I'm going to show you guys the questions that we ask ourselves. So basically, the whole reason why we're doing our top-down analysis is to take away information from each time frame. And the questions help us to do that, okay? So what exactly are the questions that we ask ourselves? So as you guys may know from the page itself and the way we've showed the whole, our approach, we ask ourselves what, why, when, where. So what exactly are these 4 questions? Now, these 4 questions can be translated into the chart itself. So certain examples that I can give in terms of what did recent price mitigate? So let me see if this actually draws. Give me a second. Cool. So yeah, the question here is in terms of what. So this is one of the first questions we ask ourselves. So what exactly is what? So in terms of the way I approach the chart for myself personally, I ask myself what exactly is going on, right? And that's the main question we're asking ourselves when we first open up your high time frames. So what I want to understand from here is what exactly are the intentions. So the intentions can be taken away from your current flow. So I ask myself, what is the current flow? So you can see the previous flow, we were range bound within this range, price mitigated off of here somewhere, we had a momentum shift. So we saw that this did sell to buy. This took out this liquidity. So we know the current price failed to break this low. As a lot of people know already from hard time frame EU analysis, this is the monthly. So what exactly did we see here? We see that this mitigated. So this is one of the questions answered. What did price mitigate? We know what price mitigated in here. This was within your discounts of some the hard time frame range. So what did this mitigation cause? Now that's another question itself. So what did it mitigate and what did the mitigation cause? These are 2 very important questions we can ask to the market to take away and deduct the information from that to identify your flow. So we know that this mitigated high time frame edge.
Can you go a little bit slower, maybe?
Yeah, sure.
I'm trying to make notes, man. But
it's fine. This is getting recorded at the same time, so if you guys need to go back to it as well. So what we know is this mitigated that over here. These are range bars, and these initially caused a move higher. But what we want to know here is this mitigated, and it caused this move higher, which took out market structure. This was liquidity that was built for higher prices. And we know that now this mitigation, which caused this entire move higher, failed to break. So we want to know what exactly happened up top over here. So what did price mitigate over here? As you can see, these were the ranges, the initial low prices. So now we know what the buy money was and what it mitigated. And we know what the sell money was and what it mitigated. So these answer some of the major questions for us. What did price mitigate? Now we want to know what did the mitigation cause? We know that this mitigation here caused this entire move higher, which took out this liquidity, right? It caused that momentum shift. At the same time, what did this mitigation cause? This mitigation caused this entire move lower. This was your area of supply. This was your area of demand. Now, these 2 things that we can take away from the market, what did price mitigate and what did it cause? It can give us our range. Because we know that from this mitigation of this move higher and this mitigation, this move lower, now price is currently trading between these 2 levels, right? So we know that we can focus in towards this and we want to identify intentions within this range. So again, what do we ask ourselves? What did price mitigate? What did it cause? And what is the price flow? So from here, we can identify that this range mitigated and caused another move higher, okay? So this is clear bullish intentions, nothing complicated here. Low failed to break, liquidity engineered for higher prices. This range, the initial lower prices, was the initiator. That's why we came here and we had a momentum shift, okay, on lower time frame. But this is going a bit off topic. So what type of range are we in? This is another question that we can ask ourselves. So we know if this move higher, the sell to buy initiate high prices, we know that this right now is your buying range, right? Because your low is not broken yet. So if we can identify the price flow, which is currently bullish, we can identify our range, which is your buying range. We can identify the orders which mitigated, and what kind of reactions did they cause? This move higher, this move lower. So we know that what this allows us to do is identify where bullish and buy and bear money, buy and sell money is being placed. So if we transfer over these orders, we know that this order here caused this entire move higher, and we can work our way up towards where the last bit of buy money is. And from this order here, we can now work where the last bit of sell money is. This is very key in identifying your lower time frame regions. So the entire narrative, at the end of the day, we're trying to build a narrative here from each time frame. So another thing that we ask ourselves on each time frame is why. So what exactly is why? Why is asking the intentions itself, as in like why was price delivered this way? As in this allows us to know that this is liquidity. Why is liquidity so important? We know that price likes to create liquidity, to seek liquidity. So it's very important to ask why. As in, why did this low not fail? Why did this low fail to break? Because intentions are bullish. As you can see, that asking this question can basically take away a lot of bullshit, for example. So it allows you to simplify the problem itself. So we don't necessarily need to know like what exactly each thing is mitigating. What we need to know is what exactly happened after the mitigation and why price got delivered this way. So over here, price was delivered in a manner of creating liquidity for high prices. But over here, price was delivered with the intention of impulse, right? This is an impulsive move higher. So again, this is telling us intentions. So why is price currently flowing in this direction? So this allows us to, again, position ourselves on the lower time frames. So there's a lot of questions we can ask here from each time frame, but the way I'm gonna structure this is asking these questions to then bring them down to your lower time frame from for today's London sales. So as you guys already know, your higher time frame on the monthly. Again, this is the really bigger picture here. What we like to focus on is understanding your monthly, your weekly, and then bringing it down to daily, 4 hour, 1 hour, 15 minute, etc. So let's go jump down to the weekly here. Again, as a lot of you guys already know here, we've been looking at the weekly for quite a while now. And again, there's one candle per week. So there's nothing much that changes here. But what we know is that, again, we were within this range and there was this liquidity that was built prior to this impulsive move higher, which targeted all this liquidity. And this range that initiated lower prices is exactly the region where price came to have a lower time frame momentum shift to the downside. Reason being, we know what this mitigated, we know what it caused, we know what this mitigated, we know what this caused. So we're not surprised when we see that price comes here to have bearish momentum shift, because we know that the sell money was last placed in a year. Now that gets transferred into this, and we may see sales continue if order flow is protected to the downside. But at the same time, we know higher time frame intentions or for to go higher. Again, we ask ourselves your what, why, when, where. So typical questions that we can ask ourselves here for what is, again, what did price mitigate? What kind of reaction did it cause? What kind of liquidity is being engineered currently at the same time? We know that there's liquidity for high prices. This is potentially liquidity for low prices. So again, this is to build your narrative all the way down to your lower time frames. There's quite a lot of information that we can take away from your weekly, daily, but we like to focus on our 4 hour, 1 hour once we have every single detail from this taken away. So what details can be taken away if we were trying to focus on today's sales? What details can we take away from the weekly over here? We know that this range, the initial lower prices reacted to then have a momentum shift that ran through all this liquidity. And then we saw buy money come in over here. But recently, for a lot of people that, were confused with why exactly did we have such a strong reaction. Understand that this range, the initial low prices that mitigated and transferred into this range bar, the initial low prices, price simply just took the money into here. The sell money is now currently within that. So it's simply just a transfer of sell money. That's why we see that this order here caused such a reactive move lower. So we know, again, we can take away intentions from here is that sell money is currently within this, and this was an aggressive move lower. You can see that buy to sell, initiate low prices. So when I saw this in the morning, I basically understood that we may see price run through liquidity that's built for lower prices, and we want to see how price reacts to the edge money. So another thing we can ask ourselves here is where are we within the high time frame range? We know that within this range, we came to the premiums, the premium range itself, and within this as well, there was a sell range. We came into the premium of that sell range. So a very reactive region. You're very reactive region to observe a bearish momentum shift. Again, this is not just a ordinary sort of observation talk. This is more focused towards the cells itself, as in how are we piecing together the narrative, asking these questions. And the last question is when. So when is kind of like asking yourself, when's the best time to engage the market? As in like what time should we start looking for an entry? Or it can also be used towards your targets, as in when can we start to take partials, and when can we start to actually exit our positions, but that'll be focused more towards the lower time frames. So again, this is the weekly. We know where sell money is currently placed within this high. We know where buy money is. This wick mitigated over here. This wick over here was your last sell to buy, which mitigated and caused this entire move higher. So if we were to know where buy and sell money is, it's currently within these two regions over here. So what I can take away from here is I want to observe how price reacts to these regions to see if intentions are to protect either this or this. So if we know that if this is to protect, price will have a lower time for momentum shift here to continue higher, right? Or if sells are to continue, price will protect this order instead to continue lower, because there is liquidity for low prices. So we're identifying our liquidity, we're identifying what price mitigated, what kind of reaction did it cause. These are all questions that we want to continuously ask ourselves, and we stress on the importance of asking these questions. So now let's go down to the daily. Typing the wrong thing. So now this is the daily here. Daily, what exactly can we take away from the daily here? Again, each time frame is a representation of the same data. So what we see on the weekly is the same thing we see on the daily, but you're just seeing it a bit more zoomed in. You're seeing a bit more detail. So we're taking away information from whatever time frame we possibly can get our hands on. And certain time frames we can't get our hands on. That's why we merge these candles together. So what information can we take away from here? So it's quite easy to identify your buying range in here, as in this is the entire move that caused this entire move higher, as in this sell to buy. And then this buy to sell over here, that your last sell money was in here, your last buy money was in here. So it's quite easy to identify this buying range. Shouldn't be quite a task. And then at the same time, we know that when bearish momentum shift did occur in here, we managed to create this sell range. As in, if sells are to continue, we want to protect this order which initiate low prices. So we know if sells are to come in, they're going to come in within this range. And if buys are to come in, they're going to come in within this range. And there's going to be sub ranges within these as well, as we've covered in previous topics. So the information I can take away from here in terms of what orders got mitigated, what kind of reactions did we cause, where were we within the range. We know previously that there was this buying sub range, and this was an unmitigated order. So one thing I can identify here is our buying range. Another thing I can identify is unmitigated order that caused this entire move higher. So we know what kind of order this was and what did it cause, what kind of liquidity did it build prior to getting mitigated. And we know that when price did come into here, we mitigated and caused aggressive move away, which took out your previous sell range. So we know that buy money was in that order over there. And then that got transferred into here, which caused further move higher. But then we see that this buy to sell, which actually a couple of members spotted before me, was your buy to sell, which mitigated your 2018 range, which was your weekly, which we can see on the weekly. So we're not surprised to see this move lower due to what it mitigated. So this move lower, it held that money, and this was unmitigated. And within this was your sell range, correct? So what we see is we're not surprised when this buy to sell is tapped at the open, and we see an aggressive move lower. Okay, so again, we're trying to build a narrative here, as in like what exactly can we understand and bring down to your lower time frames to then have your execution. Okay, so this is the importance of your higher time frame down to lower time frame analysis. Is we're trying to follow the higher time frame intentions, and then we're trying to execute on the lower time frames. So this is why it's so important to basically not don't spend eternity on any time frame itself, but do try to take away as much information as you can from each time frame. So from this time frame, when this daily kind of closed previously, we know that the pressure was definitely onto this order, because at that time, this was your buying range, as in that buy money got transferred from this order into this, from this into this, and then from this we wanted to see a transfer to continue higher. So why is it the price closed with such a strong momentum on the daily at the 50% over here? So we know that if buys are to come in, you're either gonna mitigate the open or the 50% region, or edge money potentially to have a bullish momentum shift to continue higher. So I know from the daily, this is only the daily so far, I know that if buys are to continue, we want to hold this order to continue higher. And if sells are to continue, we want to see what kind of price delivery do you have within the daily candle itself to identify any orders which need to be protected to continue lower. Because we were at a region where we could have bought up from, but also at the same time we could sell. So this was the narrative that me and E had for the day itself. So yeah, this is the information that we're taking away from the daily. We know our buying range. This was our buying range. Within this, we had our sell range too, which we can see on the lower time frames. We know what this mitigated. We know what this mitigated. We know what money got transferred over, where the last bit of money is. And then on your lower time frames, we're going to be able to spot the liquidity that's engineered for future prices. So let's jump down to the 4 hour now. So I think when we were talking on Friday with the market review, when price did close, we identified this region over here. Now, what exactly was this? This was that buy to sell. So I'll come back to this as in like why this was important itself. But what we can understand here was the higher time frame money transfer was within this, right? So this caused that V-shaped recovery. This became your sell to buy, which caused this entire move higher. We saw price come back to mitigate the open to then continue higher again. And then up here, we mitigated your previous buy to sell. So that mitigated the open, caused it to aggressively move lower, which targeted all this liquidity, which was built for lower prices previously. So when market did open, we saw price actually open over here. Let me actually replay this. So this is what we observed in the morning, well, at Sunday night time. We saw price had open over here, so there was liquidity already built for lower prices. This over here, sorry. So our narrative here was, again, we knew that the buy money got transferred into this order. So this over here was your daily sell to buy. This was your order block. Okay, so we know that if buys are to continue, we want to either observe a momentum shift at the open or 50%. As you can see, price has already mitigated the open over here. This is your candle merging. This goes back to topic 1. So if we merge these candles together, this was your sell to buy. It mitigated the open to continue higher. It actually built liquidity at the open to mitigate 50% potentially. So the narrative here was we want to basically observe how price reacts to your recent sell pockets of money, and how price reacts to your higher time frame sell to buy, which caused this entire move higher. So we know that there's going to be either a reaction within possibly the 50% for bullish price, or if bearish prices to continue, we're going to react to the recent range, the initial lower prices. Now, what exactly is this? This was that buy to sell. Again, if we merge these candles together, once we go down to your lower time frames, you're going to be able to identify that this was that buy to sell that initiated this move lower. So potentially price can just come up to mitigate this to continue lower. So we know that anywhere within this, we might see a bearish momentum shift to continue lower. And anywhere within this, we might see bullish momentum shift to continue higher. But our main overlook on it was that we may just continue to run through this, reason being due to the aggressiveness itself. So this, again, it ties back into asking why is price being delivered this way? As in, what did it cause? We know what these caused. What did it mitigate? We know what these mitigated. What did it cause? This caused an aggressive move lower. This caused this entire move higher. We ask ourselves, where are we within the range? This is why we don't have a bias itself. As in, we know where we are within the range. This is the buying range. We came towards your discount. This is that sell to buy the initial high prices. So it's not dumb to think that we might have a bullish momentum shift in here. You know, you have to be aware that potentially buy money might just get transferred over into this order to continue higher, as your higher time frame intentions are to continue higher. But at the same time, you have to understand that this is your current flow. is bearish. We want to possibly see any sort of continuations of this flow because of the aggressiveness, and we know that there is liquidity built for lower prices. So this is what we can take away from the 4-hour. I know my recent activity of price was this, and my recent buying activity of price, well, was this. So we know that, again, these are your regions of your reaction points. We just call them RPs, or you could give them any name you want: range to initiate price, sell to buy to sell. What we know is that these are regions of importance for price. So let's go down to the 1 hour. The moment we work our way down towards the lower time frames, we start to ask ourselves even more questions, as in terms of like liquidity itself, and what did the previous session do? All these sort of questions that we can ask ourselves to improve our narrative down to the executions. So in terms of the 1 hour, where did this open? Where exactly was it? 12. So he places shorts somewhere afterwards in terms of after London, but from the narrative itself that we can see over here, when price did open over here, opened at this region over here. So what exactly could we understand when price, waking up in the mornings, since we're UK based, we wake up around 7 a.m., 6 a.m. for London time. So this is a realistic scenario, as in like, what questions are we asking ourselves straight away? What exactly happened? So looking at this, we knew that there was liquidity built for low prices previously. Price just came back to that region to build more liquidity for low prices. And again, our current order flow was very strong and very bearish. This was aggressive. Look at the amount of time this took to climb higher compared to the amount of time this is taken to basically take out all this liquidity. We're not surprised. We know that what this mitigated. We know there was liquidity for lower prices. This is all liquidity for lower prices. We don't want to look at these as, your POIs where you can buy from, because if price was to buy your recent region where you want to respect is this. Reason being, this was your previous buying range. So if you wanted to continue higher, you want to protect this sell to buy. You want to potentially mitigate. As you can see, it did mitigate 50%, but no reaction came through. We just followed through with bearish momentum shift, your bearish order flow itself, and targeted all this liquidity. So when price did open over here, we built more liquidity. And then in the morning, I saw that there was this inefficiency, 50% that got mitigated and caused a bearish momentum shift to the downside. So I want to see what exactly happened here in terms of like what kind of price lever did we see, because potentially we can continue these intentions to target even further liquidity. So let's jump down to 15 minutes. So again, we're asking ourselves here what, why, when, where, as in what exactly is your order flow itself. We know order flow is bearish. These highs are continuously getting protected. Sell money is getting transferred over to continue these reactions, as in they're protecting their intentions to continue lower. We know what's on the left, liquidity built for lower prices already. So that 1 hour inefficiency fill that we saw, which caused a bearish momentum shift, is actually this bar over here. This was that buy to sell, the initiate lower prices. Again, you're seeing the price reacts to the nearest region of valid pocket of money. So we came into here, we mitigated, and we caused a bearish momentum shift. And over here was where we were basically observing on your lower time frames. So when price does do this, we want to see if recent buy money, as in when prices can deliver higher, if prices to continue higher, you want to basically protect this buying range, right? You want to mitigate orders in here to continue higher, but we don't see that. We see the price fail to do that. So there was a narrative already for higher time frame sales. We wanted to continue higher time frame flow. So we knew that price is likely to react to this, and any bearish momentum shift in here is likely to continue lower. At the same time, we knew that bullish money can't come in too. So now this is where our execution part comes in, as in we now go down to your lower time frames. So when we're down to our lower time frames, that's basically where these questions that we ask ourselves are being asked pretty much every single candle. Like, what exactly is happening? What do we just observe? Because in order to build your whole confidence in, taking a trade itself. Confidence comes from understanding pretty much everything there is to understand. So the more understanding you have, the more confidence you have in to actually execute your ideas. This is why it's so important to ask these questions: your what, why, when, and where. As in, you can give these 4 questions any definition you want. These can be any sort of questions. Think of it like a checklist. As in, you can give under the what could be many things, such as what did price mitigate, what did it cause, what kind of price flow do we have, what liquidity is being engineered. And I might potentially throw in a sheet for you guys as well, where there's a couple examples of these questions. So this was the 1 minute. So what do we see in here? This is the picture that we see at that time. We know that when market did open over here, it continued higher. So let me turn on the session indicator. This is our Asian session, by the way, slightly orange. So we see that 1 hour inefficiency fill caused a bearish momentum shift because, again, there's liquidity built for lower prices. So that recent sell to buy, which does not get respected, tells us that we might see a deeper pullback within our buying range. So if prices to continue higher, where is your orders where banks might see as cheap price to continue higher from? So we can identify that this is just liquidity, as in these are not your POIs to buy from typically. We want to see where can price react to within the range itself. So where we started to be active was later on in the day, which is kind of the sad part because it's not a trade which we can relate to in terms of right now. But this is your ideal play, as in this was easy plays. So when price was within this range, it did react to this sell to buy. We reacted over here. So what we want to know is what exactly was the importance of this order. This was an order that caused inefficiency and moved price higher, and this was an unmitigated order within your buying range, and this was a premium order itself as well. At the same time, do understand that there is liquidity for lower prices too, due to higher time frame flow, which we might see get price running through. So why exactly was it that this move over here pushed prices higher? Reason being, again, we know that there's liquidity engineered for high prices. So when this move higher started occurring, we want to know if this sell mitigation, which filled that 1 hour inefficiency, is strong enough to push price lower still, as in our banks completely happy with this last push higher. So this is where we identify our range, as in where are we within the range? What did this mitigate? Again, we're piecing these things together. Why is price getting delivered to us in this manner? So when we piece these things together, which let's just do it right now. So what exactly is going on? What did this mitigate? This mitigated 4 hour. Let me actually just go back to it. The price was over here at that time. So basically just building liquidity, no particular mitigation, no significant mitigation in itself, which is causing any particular moves. But from the sell side, we know what this mitigated. This mitigated the inefficiency region, your range bar, which initiated lower prices, that pocket of money, which was your buy to sell, initiated lower prices. So price came in here and reacted, and we saw a bearish momentum shift that took out liquidity to mitigate this order over here. So we know that if buys are to continue, this was a decent region to react from and to continue your flow. So what exactly are we observing here? What we're observing here is, what did this mitigate? What did it cause? This caused that move higher. This caused that move lower. So what did this cause? This mitigation then caused this move higher. Where are we within the range? We can tell that within the buying range, we came to discounted orders. Why did price get delivered to us in this manner? In this manner over here, was in order to mitigate this to continue higher, as in this was liquidity built to target higher prices. So why is it the price fails to break this high? Reason being because, well, when we did see this momentum shift occur over here, this gave us our reasons. This would have given us our reasons to sell. So when price had mitigated this order over here, to then have a bullish momentum shift, as in your last buy to sell gets taken out over here. So we see that this is all liquidity for higher prices. Ideally, we want to continue order flow itself to target higher, right? As in, for anyone that took these buys in Asian session, we want to just basically mitigate all these orders to continue higher. So this is where we ask ourselves in terms of what exactly is the price flowing, as we know that all this liquidity was being engineered for lower prices, as in this is not your healthy delivery of price itself. So within this, again, we had the sell range. We came into edge itself, as in this over here. I'm guessing on the 1 minute, let's zoom in. Again, this gives us an example of you don't necessarily need to know the POI itself, but rather what it caused. So we know that this liquidity got targeted, all this liquidity got targeted to come into this order. And why is it that price is now stalling over here? So what exactly did this mitigation cause? This mitigation caused that last buy sell to buy to get run through. Okay, so this was our first sign of like intentions. Again, we were asking ourselves these questions: what, why, when, where. So to know the what did this mitigate? We know that. What did this mitigate? We know that too. Why is price being delivered to us in this manner? We know why. This was building that liquidity prior to mitigating that order, so that they could target that liquidity higher, which is your buy case. And we know why price is being delivered in this manner too, which is liquidity for lower prices, telling us that potentially we might actually see price running through these lows. So we're not surprised if these lows are running through due to high time frame flow. So when we ask ourselves where, we ask ourselves, where are we within the range? And just a second. At the same time, within this range as well, quite a simple thing we ask ourselves as well is where are we within the pricing of this range, as in your equilibrium, your premiums, your discounts. Again, price is likely to react to the most recent region to continue, as in we may not always see your premiums or your discount for buys. But what can happen is that these are probable regions. These are your cheap prices. These premiums are potential regions where price is likely to react to. Any orders in here that are unmitigated or causes an aggressive move lower or any sort of importance, we may see a bearish momentum shift within these regions. I hope that's making sense so far. Again, we remember from the 4 hour, the 1 hour, the daily, the order flow, the bearish order flow was quite strong. Yeah, previous order flow was bullish, but the bearish order flow, not only did it take out your buying range, but just from the weekly candle alone, it was quite of a strong push lower. So our intentions are basically to follow what the market is showing us. And around this region over here, it started to tell us that we may not see a bullish continuation. So if we're going to piece this together, does it not tell us that all this liquidity can potentially get targeted if sales are to continue? So this is sort of giving us our what can we target and when can we engage. So when can we engage? This is sort of more personal to you, as in, yeah, we can look towards like session timings and stuff like this, but at the same time, it's like for us, we like to trade continuation. So when exactly can we engage? We can engage when we've seen that momentum shift occur, and the intentions are now to protect any range that initiate low prices in this region over here to continue our sales. So this is more personal towards us, and I know a lot of you guys are starting to look into continuation trades as well, as in they're very probable, and it's a lot more, it's less risky basically. Again, with logic, there's no risk, but it's basically allowing us to stack our entries at the same time, blah, blah, blah. So again, going into this, in terms of the session itself, the session, what did the session do? So Asian session opened over here. Actually, it opened over here. So Asian session, when it did open, what did Asian session actually do? So again, there's a story behind the picture. So the story here is what, anyways, I can understand, is the Asian session actually bought up to mitigate the sell order that caused the previous move lower, and then they targeted their own liquidity for lower prices. And from here, order flow itself was bearish. So what I can understand from here is that Asian session actually initiated your sells. So the next session may actually continue the previous session's intentions. So if London is to continue, we might actually see that London grabs the nearest Asian order to continue lower, because your higher time frame intentions, again, from the entire analysis that we've done so far, is we may see sell continuations. So what exactly can we look within this region over here? What can we look at within this region? As described, you have to basically keep your eye on how this price was delivered. So this is not your ideal buy price delivery. What we know is that there's a lot of liquidity that's been engineered for lower prices. So if I'm in these buys, I would be very concerned. You could call it the region of invalidation would be this, as in this sell to buy. If it mitigates and doesn't continue higher, like if this is run through, then I'll be very concerned for all this liquidity due to the fact that this is stacked. And at the same time, if we're seeing a momentum shift occur within the sell range itself towards your edge, so this is your sell range, if we're seeing a momentum shift occur, not towards the edge itself, but if you're seeing a momentum shift occur at your unmitigated buys or sells, then potentially we may think of this as your weak low at the same time, right? So keeping in mind the entire thing itself is a buying range. You have to be aware of this. So we know what this mitigated, but why is it that this order flow manages to snip over here? Why is it cut? Why is intentions to not break this range high over here? Because if this is your buying range, this sell to buy, to then create all this liquidity, to then mitigate that order, why is it that price is not continuing higher? So this would be concerning for your buys. So typically we want to just mitigate this to continue higher, right? So this is giving us our intentions that potentially we want to study what kind of price delivery was it that formed, that allowed this price to mitigate over here and then cause a bearish momentum shift. This tells us that potentially we may run through this pricing. And then this is liquidity for lower prices too. So this becomes your weak low because it's now failing to break this high. So this is one of those cases where you would have to basically position yourself for hedges, because previous order flow can continue, but higher time frame order flow is bearish. So that can continue lower too. So now down to the main entry itself, as in how can we position ourselves in here. So prior to whatever happened in here, we know that with each low that is made, this is liquidity resting underneath here. This is your Asian low at that time. Okay. So again, this is liquidity that has been built for lower prices. We've been able to identify this. So we know prior to coming to that mitigation, this is liquidity that's built for lower prices. So what exactly do we see in here? We see that sell to buy has failed to actually provide a move higher. We see that this actually just gets run through. Now, for a lot of people, you could just see this as your liquidity grab, correct? Because of no strong closure itself on your lower time frame, on your 1 minute, as in this is just a wick. This is a bullish wick. So this could just be a liquidity grab. So they want to continue buys over here. Well, what you have to understand here is that the sell money is currently within this, and the buy money was currently within this. So why is it that the buy money is completely taken out? And you want to understand, what did this mitigate if buys are to continue? So this didn't mitigate anything in particular itself. This was just taking out liquidity. So we know that price had now formed this sell range at that time. This high fails to break. So what we can identify here is after that momentum shift, this is one of our favorite plays itself. So from here, intentions are now starting to appear. The reason being because we see that momentum shift, we see that this low has now been targeted. We may actually now see higher time frame sell money come into play. And we know what kind of time it is as well. When can we engage? We know this is pre-London. So a lot of the times pre-London, for the people that trade London, you know that around 7 a.m., 7:30, we are able to see quite a lot of the initiating moves prior to London and stuff. So we weren't surprised when, how this actually managed to happen and where we could potentially position ourselves within this. So as mentioned, we managed, well, not we, but price, this was the previous buying range. As you can see, this managed to get taken out. So potentially we want to now observe for any potential sells. We want to see if sell order flow is protected or not. In order to do that, we identify a range at that time. Prior to this low, this was our range itself, okay? So what exactly had happened within this range itself? It may look confusing as in like you're seeing this, but what you have to understand is your edges. We know this was the buy money that mitigated, nothing happened, actually got run through. So what exactly caused this money to get run through? Let's see what actually happened up here. So this is what we see. So you can see that buy to sell initiated lower prices. At the same time, there was this liquidity that was built for what? Notice how this order, the open is tapped. So we may actually see your edge money come in, your sell range. So this liquidity that's built for lower prices has, later on gets run through anyways, but at that time, we see that this low gets run through, so we've identified our sell range. We know there's liquidity for low prices. So by now, all it really comes down to is where are we going to position ourselves and how are we going to position ourselves. So a lot of the times over here for us, since we take continuation trades, what we notice here is that, your edges are unmitigated. Price comes up, and this was liquidity built for mitigating this order over here. So very typical play over here would either be this or prior later on bearish momentum shift itself. So what exactly happened here? We came to target this liquidity to mitigate this candle over here, this candle, this buy to sell. So what we know is that sell money is currently within this, as in this is your sell edge money. So if intentions are for lower prices, we want to protect this to continue lower, to then aim down to you. So after this whole thing started to range, building the liquidity, notice how this was building liquidity for lower prices. What does it do? It comes up to mitigate 50%. Again, we're not POI traders themselves. We're not exactly leaving an order at 50%. Reason being because order flow at that time was bullish. So we might have seen price mitigate this to then just continue higher. So this is what we mean by we just want to let them make the move. And we're piecing together the whole narrative, what, why, when, where. So when is a very important question that we can ask ourselves at the same time. So a typical play for us over here would have been, once we know that this mitigated, so sell money is currently within this order over here. So if buy order flow is to continue higher, we want to protect your buy range at that time. So from topic 4, you guys would know that price moves in your sub ranges. So our sub range at that time in terms of buys was this. As you can see, previous order flow was bullish. You're mitigating to continue higher. As you can see, before this range was formed, this liquidity gets run through to target this order to then completely break your buying range. So we could classify this as your bearish momentum shift within the range itself, identifying intentions because of the transfer of money itself. Again, this is high time frame. This is your high time frame intentions. Potentially, we're going to run through these lows. This is basically drilling into your guys' head that we're not supposed to have any bias at all. What we want to see is if money is protected in each direction. So when we see that this gets run through, what does this tell us about the buying price delivery? As in, did the sells not overpower the buys? So sell money is currently within this move higher, this move lower. So it went up to then sell. So this became our V-shaped recovery, which had that momentum shift. So on higher time frame, this would have been that rejection. So what was the rejection high? It was this, as in this mitigated to continue lower. So our intentions, not our intentions, market's intentions are potentially to run through this liquidity, right? So from here, our job is to identify where can we optimally position ourselves. So a lot of the times what we do is we go even further down to the seconds time frames. Sadly, I don't have I use another software for seconds. I don't use TradingView. But in terms of this over here, what we can identify is that your full range breakout, your full breakout structure was over here. So as E has mentioned before in his calls and markups, and what we do see a lot of the times is that they initiate price by creating that range, they initiate low price to take out structure. And a lot of the times we see them to come up to mitigate, to just continue your intentions. So for the people that can see it, which a lot of people can, we know that price bought up from this low over here and then sold from this high over here. So this becomes our buy to sell that took out significant structure. And what did this mitigate? It mitigated the previous buy to sell. So we're seeing money get transferred over to then continue. So we're seeing the bearish order flow coming into the market. We've identified what this mitigated. We've identified the liquidity that's built for lower prices. We've identified where we are within the range itself. We identified when can we engage. Well, this is the optimal time to engage because now we've seen that momentum shift occur. We've seen bearish order flow come in. We've seen mitigations to continue. So our execution here is to basically, again, it's quite simple in terms of identifying where can we optimally position ourselves within the range. So for the ones that can see it, the buy to sell creates that range, the sell range. I'll set our selling sub range. So we know the price is currently confined between this high and this low until we might see the high or the low get run through. What allows the low to get run through is your high time frame intentions. So we know the order flow itself, which is king, is going to allow price to run through either the high or the low. In this case, it would have been the low because of order flow and our market intention itself. So within this, we can then spot the entry itself, as in where's the entry. This you have to be quick for. Your buy to then sell, as you can see, comes up to mitigate over here. So let's actually place an entry over here. So if we were to take 50% and cover the high, the reason why this would be covered is because we know the intentions are to continue lower, to mitigate to continue lower. So while this could get run through, now we focus on this range for if this is protected to continue lower. But we know that your recent activity, not the most recent, again, we know that this is a fresh mitigation. This is flow mitigation. When price is further lower, we want to basically identify if the nearest region will even reject or not, or if it's liquidity. But we know that the closer you are towards your initial momentum shift, your initial move, price is very likely to react to continue, as in this will be the cheapest price the banks will grab. So within this, I'll also zoom in a bit more. Again, this is your buying to then sell. So this creates that buy to sell, which actually takes out this low over here. I believe a lot of people, I think a couple members actually took this, I'm pretty sure. So we see further momentum shift, further break in structure to come up to mitigate that order, to simply continue lower. Again, the reason why we're even able to identify this is this isn't random. We've been asking ourselves these questions on every single time frame, coming all the way down to our lower time frames. We know what exactly is going on, as in we know what the session has done, what kind of liquidity has been built prior to the mitigations, what kind of intentions are there. So if I was to go back to, so again, entering a trade isn't everything. We want to know where can we potentially target, where can we potentially exit itself and take off our full position. So from here alone, we know that this liquidity was built for lower prices. So as mentioned before, this would have become a weak low, as in it failed to break the range high previously. So this can all be liquidity that we can target. So this can be your target one. And then let's look at the bigger picture here. Let me go on 15 minutes. What can we see over here? So again, this was our target one. You could say this is your target two. And then if this liquidity has been run through, what is over here? There's liquidity over here, three, target number three, you could say. We don't label our targets. What we do is we take partials, these regions, and write the position out down to its targets itself. So at each region over here, we're likely to take our partials to exit the position. So reason why this liquidity would be most likely our exits is because this over here is your higher time frame buying range low, as you can see over here. So for the people that know about the, it's not really a concept, but edge money itself, we know that this range initiated this entire move higher. So price is likely to react to this, to have a bullish momentum shift to continue higher, because we know there is liquidity currently for higher prices. So this would most likely be our targets, as in full position will be exited after targeting this liquidity. So what kind of price delivery did we get after the entry itself? Because that's the second part to entering itself. We want to basically like baby steps, as in, is your entry itself being Michael Long has been in the waiting room. Yo, sorry man. Anyways, let's continue. Let me close this. So entering is not the end of it. We want to basically observe if the order flow is with us or not. You know your targets, and we know the price is to mitigate, to continue. So we see further examples over here. In this case, this was an inefficiency fill. This was that buy to sell. So this is examples of observation itself. So from this buy to this buy to sell, what exactly happened here? This got taken out. We see price come up to mitigate that, to continue lower. So this is another entry over here, this range bar. So we know on lower time frames, this was that buy to sell. So what does price do? It comes up to mitigate that, to then continue further lower. Now, what did this create? This created another selling range. So we see intentions are to continuously protect sell money, to continue lower. So these are basically giving us our continuous ideas and trades. You can see that over here, further momentum shift occurred, come up to mitigate the last range they initiate low prices, to continue lower. Same idea all the way till basically our targets are met. So what would a trade like this give us within the day? If you're to target down to your first target, 1 to 6, 1 to 15, 1 to 35, potentially. So this is basically the analysis, top-down analysis that can be done to take your London cells, not London cells, pre-London cells. As we see, the London session, when it did come in, it initiated lower prices. It followed through with what previous sessions' intentions were. So I hope that shows as to how we, again, this is not itself, the price analysis itself, as in that's shared through the markups, but this is showing what exactly is higher time frame down to low type analysis. What exactly are the questions that we are asking ourselves? Your what, why, when, where. After this thing is uploaded, I will share my, you could call it cheat sheet. These are just questions that I've written down for you guys, as in terms of what to ask yourself when on each time frame. Again, each time frame is fractal. We're going to see the same price delivery on each time frame. We're going to see basically the same thing happen throughout each time frame. What our job here is to take away information from each time frame down to your execution timeframes, which is your 1 minute, 15 second, 5 second, even for the people that are onto that. So yeah, any questions? Seems there's no questions. No worries. I hope I didn't go too fast with this. Again, this is recorded. I hope you guys can just take value away from this. And for a lot of the people, this is not complicated as much anymore. We've seen a lot of you guys progress really well. And so yeah, this is just a good reminder of what exactly is your higher time frame down to lower time frame. It's very important. Some advice would be, do not get lost on any particular time frame itself. We want to be able to zoom out if we're not able to understand our 1 minute delivery. So again, we're not surprised as to why the sales even occurred. It's quite simple. You just go to your higher time frames, zoom out. So what do we see in here? Now, with this kind of, after this inefficiency is filled and a candle like this itself is created, let me draw this out. If we see a rejection like this, does this not give us enough reasons to potentially see this liquidity get run through already? So all we want to do is we want to position ourselves on our lower time frame to play this idea. you're basically, again, it's your higher time frame idea and your lower time frame execution, simply put. So this is exactly what happened. Asian session initiated the sells, London came to mitigate, to then continue lower, and that's what we see. We see the price runs through this liquidity. Nothing complicated. It's quite simple. It's just how complicated you make it. So yeah, guys, that's pretty much it in terms of the explanation behind the high time frame down to lower time frame. Hope that helps. And again, if anyone has any questions, I'll give one more minute. It seems everyone's quite content with it. No worries at all. So yeah, guys, that'll be everything from me today. Topic 6 next week, which is going to be what is it again? It's basically stress testing and basically finding your own flow. So a bit more personal from me and E. We're going to basically talk about how we did it. And yeah, that's pretty much it for today. And enjoy the rest of your day, guys. This will be recorded. It'll be up in just straight after this. And so will be the cheat sheet. And that's it. Thank you very much.
Thanks, boys.
No worries.